Business owners, did you know that you can transfer some of your employment responsibilities, including workers' compensation claims, to a professional employer organization with a process called employee leasing? Stay tuned for part 1 for an overview and some concerns.
Welcome to this episode of Increased Profitability Through Strategic Workers' Comp Management with your host, Bonnie Frazier.
Your company, known as the client employer, can contract with a professional employer organization known as a PEO. Your employees become co-employees of the PEO, which then manages the HR functions and provides benefits such as health insurance. Often, the PEO can get better health care rates than an individual small business can. You can also lease just some of your employees. For example, keep the office workers under your policy and lease the operational employees to the PEO. You would continue to pay premium based on the office workers' salary information, and the PEO would be responsible for the operational employees' payroll and workers' comp costs. If you transfer all of your employees to the PEO, your company must maintain its own coverage and pay at least the minimum yearly premium. Concerns. Make sure that the PEO contract states that the PEO accepts fiduciary responsibility for payment of workers' comp premiums, payroll taxes, etc. Otherwise, you may find your company in trouble with the IRS, Ohio Job and Family Services, and/or the Ohio BWC if the PEO fails to pay completely and timely. You will not have access to the medical records or claim cost information during the contract, so you may be quite surprised at the end of the contract. I suggest that you ask your PEO at least yearly for a list of claims and their costs, so you will have information to help you decide whether to continue in the PEO relationship. This will also make sure that only your employees' claims are credited to your company. The PEO has 30 days at the end of the contract to notify the BWC of claims and payroll that should go back to your company. Now, you have no idea how long that transfer will take, which means that hearings can take place and decisions be made that you may be unable to influence, but you'll be stuck with the consequences. Here are your takeaways. 1. If you lease all your employees to the PEO, you must maintain your workers' comp coverage by paying at least the minimum premium every year. 2. Make sure the PEO contract states that the PEO accepts fiduciary responsibility for premium and tax payments. 3. The PEO has 30 days after the contract ends to notify the BWC, so be aware of any recent claim activity. And 4. An independent TPA, like ActuComp, can guide you through the transition from PEO back to your company. So, call 440-933-6601 for a conversation about how to get the workers' comp monkey off your back.
Thanks for watching Increased Profitability Through Strategic Workers' Comp Management with Bonnie Frazier. For more information, visit actucomp-ohio.com.